The risk there is, though, there's a lot of support there. You've got a triple bottom beginning to work. A more conservative entry, letting the market gain some momentum, would be below 230 here. So either 276 or 230. I think using a 35 pip stop would work, although you've got to realize that even with a 35 pip stop, you're still in the danger zone, meaning it's fairly easy for the market to get a hold of you down there. On the long side, looking up above here, we've got a similar situation in that there is overhead resistance fairly close. Having said that, long at 2.0440 I think is an aggressive entry, meaning you're getting in very close to these highs over here. I think 475 is a much better entry. You're giving the market room to move on the upside, and once that momentum starts, that's when you get people moving along with you. Same thing on the downside. If you're going short down here at 230, there's momentum building to the downside. Over here, 37 pip stop, just because there's a little bit more room on the downside over here, even stopping out a little bit above 405 would be a prudent measure. So there you go. There's just not a lot going on, folks. Remember, we're here to make money. We're not here to make trades. Okay, we've got to take trades when the opportunity suits us, not when we think we have an opportunity. So let's wait for the patterns, let's wait for the setups, and we have to take what the market's going to give us. I'm going to be reiterating this. I'll sound like a broken record to you, but remember, we are in an unprecedented time. Real estate market is starting to melt down. Subprime market has completely gone berserk. What do I mean by that? You've got subprime lenders going out of business. You have major mortgage companies going out of business. Countrywide Financial had to take a massive infusion of capital in the form of basically a major equity stake by Bank of America. It wasn't a complete takeover, but certainly a huge equity position by Bank of America. You have broker stocks that are in the dumps right now. Banking stocks are in the dumps right now. You have a mixed bag on the U.S. equities markets. The Dow and the S&P 500 are near all-time highs, while the transportations and the utilities are not confirming. All of this points to a very volatile time, okay? Which means that really all bets are off. Remember, we've got to trade the market that's presented to us, not the one that we wish we had. True enough, in the kit, I talked about certain things. The videos in weeks past, I've talked about certain things. Not all of them apply strictly from a market standpoint. Specifically when it comes to the autopilot trades, until the market gets a clear direction, the prudent money, the smart money, the professional money is going to either sit on the sidelines or only be willing to take a trade when the position can be monitored very, very closely. Add on to all of that, all of what I just mentioned, you've got a major bank failure in the United Kingdom. I'm telling you folks, unprecedented time, a lot of opportunity. Now is not the time to try and fit the market into a box and try and say, well, fine, if you don't have a system that makes trades every single day, I'm going to go find one that will. That's very dangerous thinking. The market's in a very unique place right now. Once this thing starts to break, though, I think we're going to have a big trend on our hands, and we need to be ready to take advantage of that. So again, I'm going to be sounding like a broken record until this thing resolves itself, but we just have to remember the magnitude of the situation that we're looking at, keep our powder dry, and wait for the setup.